I spent years studying the best traders and I kept seeing one pattern show up over and over. If you don't have this, you're going to find yourself stuck in an endless cycle of making a little bit of money and then giving it all back to the market. By the end of this video, you're going to know exactly what separates profitable from unprofitable traders and how you can apply it yourself in your own trading. I had a client called Clayton who was stuck in a vicious cycle. He not only blew every single trading account he touched, but he also drove his business and marriage into the ground. I taught him exactly what I'm going to teach you in this video. And now Clayton is a funded trader running his own successful business and in a stable and loving relationship. If you're facing a mindset challenge right now in your trading, comment in the comments below and I'll offer you some guidance. Now, most traders, 99% of traders, are unprofitable. They make a little bit of money and they give it all back to the markets. And they end up investing years learning how to trade. They invest thousands of dollars in trading strategy education, and the market chews them up and spits them out. And they end up that journey unprofitable, never making a cent. In fact, most of those traders end up losing money. But there is also a small group of traders, the top traders, the 1% of traders who are consistently profitable. They consistently pull money out of the market. They scale up with funding. They get payouts over and over, and they generate money from the markets consistently. And I became obsessed analyzing and trying to differentiate what separates most traders over here and what makes a top 1% trader that is consistently profitable. And that's exactly what I ended up showing Clayton. That's exactly what I'm going to show you in this video. Now, what most traders do is they learn a new trading strategy, they start to trade and they make a little bit of money. And when they start to make money, it goes to their head. They feel proud, they feel overconfident, and they make profit and they go tell their friends, go tell their partner about how much money they made in trading and how good it is. And they go tell them the community and everybody praises them. And what happens is they start to become confident and they start to be overconfident. And then eventually they start to feel invincible. And then they get to a state of pride and self-exaggeration up here. This is, by the way, the boom part of the boom and bust cycle, where they then think that they're invincible. And when they feel they're invincible, they minimize the risks in the market. They forget the risks in the market and they deviate from their trading plan. They start forcing crappy trades onto the market, thinking that any trade they place, they're going to make money on. And then what inevitably happens, because they're deviating from their edge, from their plan, is they start to take loss after loss after loss after loss. The market humbles them because they don't know how to humble themselves and stick to their trading plan. And eventually they take so many losses that they go on the depressive swing. This is elation, this is depression. And they start to feel really down and sad. And they start to question everything. The self-doubt starts to kick in. The fear starts to kick in. And eventually they get to such a low point where they say to themselves, you know what, something has to change. So they go do some more testing and they refine their plan and they stick to their trading plan and they ensure that every single trade they take is to the T part of the high probability setups in their trading plan, because they're at the lowest point of the bust cycle here. And then what starts to happen is, because they're sticking to their trading plan now, they start to take win and win and win and win and win. And then when they're above break even in results, they have a sense of relief. And then they stick to their trading plan. And again, they start to feel proud and overconfident and invincible. And they go tell all their friends, they go tell their partner how much money they're making. They go to their job and they now resent their job because they think they can make way more money trading than they can with their job. So they start thinking about quitting their job and going full-time with trading. And they're in this state of invincibility again. And when they're in this boom state, again, they go away from their trading plan. They feel invincible. They minimize risks in the market. And then lo and behold, they start to take loss after loss after loss after loss after loss. And then the cycle repeats. And guess what? These traders go a year or 2 years or even more, 3 years, and they never make money. At the end of that 3 years, they end up break even. In fact, most traders end up losing money because they throw in the towel on the bust cycle. So this is most traders' mentality. This is the 99% of traders who stay unprofitable and inconsistent. They go on the boom and bust cycle, and the boom and bust cycle is a reflection of a poor psychology. It's a reflection of a trader who doesn't know how to manage themselves, so they run by the market. And when they're in a state of pride, they're not able to manage themselves. So what they do is they're now thinking that they can just force ideas into the market. and they end up taking losses. They have to be humbled by the market because they don't know how to humble themselves. Okay, so this is where most traders sit, and this is where most traders will trade from and never make money at the end of their journey. It's very important to understand this. Whereas the top 1% traders that I analyzed, this is exactly their mentality. They know how to break out of this, and they're consistently pulling money out of the market, consistently compounding their accounts. And in fact, they oftentimes have quantum leaps because they pick up funding from $10,000 personal account to a $200,000 funded account to $1 million in funding to beyond that. So they have these quantum leaps in capital and making money, where one month they're making $1,000, to the next month they're making $20,000 because they've 20 times their leverage, and then now they're managing millions of dollars, let's say from 200,000 to $1 million, and now that same process of making that percentage, instead of making $20,000, now making $100,000 a month. So they have these quantum leaps because they understand this very simple principle. And what that is, you can see that these traders still have a boom and bust cycle, but the time in which it takes them to go through the boom and bust cycle is much shorter. And the way they're able to do that is because they're able to manage themselves. So what happens when they take a win, they may feel a little bit elated, they may feel a little bit proud, but they have tools and a mindset and a decision-making matrix to be able to ground that. And they know how to manage themselves so they don't need to be managed by the market. So when they go into a state of pride, they have a mentality to be able to humble themselves to get them back to their trading plan. And that happens very quickly. That happens within hours, as opposed to this trader who takes months to humble themselves, and they don't eventually humble themselves, so they need to be humbled by the market. This is why the swings are so long over such a long period of time, and they stay flat, they stay inconsistent. Whereas the top traders know how to humble themselves very quickly when they take wins, and I'm going to show you how to do that in a second. And when they take losses, they know how to build themselves back up. Instead of being in this state of fear, they know how to build themselves back up to a state of being confident and sticking to their plan. And when they get a little bit proud, they know how to beat themselves up a little bit mentally so that they can get back to their trading plan, into that state of equilibrium. So they're not too proud, they're not too overconfident, but they're sticking to their plan. They're reminding themselves of the risks in the market. And when they're able to equilibrate themselves and manage themselves, they're able to just stick to their trading plan, and as a result, have consistent profitability, reap the rewards of compound interest, and reap the rewards of the access to prop firms every retail trader has access to nowadays. So how do you actually transition? What's the one thing? How do you go from inconsistent to consistent? How do you go from being on the boom and bust cycle to consistently pulling money at the market? Well, this is exactly what I found from analyzing the top traders. This is exactly what I taught Clayton. It's exactly what I teach every single one of my students. And what they do is, after a trade, if they're in a state of, or if they take a win and they're in a state of pride and self-exaggeration, feeling really, really good about that win, instead of letting those emotions get to their head and promoting this state of greed, overconfidence, which what that makes you do is deviate from your trading plan and force low quality setups into the market, which inevitably ends in losses in the bust cycle. What they do is they immediately humble themselves. They immediately remind themselves of their shortfalls, their downfalls, the risks in the market. So for example, if I was to take a win in the market, I would say to myself, okay, Pat, great win. You stuck to your trading plan. You got rewarded for that. Okay? But don't forget what happened last time. Don't forget that last time when you took a big win, you deviated from your plan and you ended up taking 3 or 4 unnecessary losses from the market because you felt proud and overconfident. And I also would remind myself that I'm just a small fish in a big pond. Who am I to think that I can come back and replicate that? So I remind myself to ensure that I'm always sticking to my trading plan. And also remind myself that I haven't even accomplished 10% of the goals I want to accomplish in my life. So who am I to be sitting here and, in my glory of making a little bit of profit on this trade when I have a lot of work to do? And this one single trade is nothing in compared to all the things I want to accomplish. So I humble myself in that moment, not to beat myself up below this state of equilibrium, but to get myself back to that state of equilibrium so I can walk away from that trade being grateful for the profit I made, but also with this strong reminder that I'm not done yet. And it's important to get back to my trading plan, get back to my proven processes, because I don't want to deviate from that. And I do that after the trade so that coming into the next trading day, I'm not all proud and overconfident forcing crappy trades. And if it was a loss that day, I'm lifting myself. I remind myself that, you know what? It's not that big of a deal. How much how much you've learned as a trader, where you've built yourself up to at this stage of your trading career. So I remind myself that it's not the end of the world. And I remind myself that every loss is a great reminder of the risks in the market and the importance of sticking to my trading plan. It's like when you touch a hot stove, you get a little burn, and it's a nice reminder that that's dangerous. So whenever I take a loss in the market, I remind myself of the importance of sticking to my plan, the risks, the true risks in the market, and the importance of sticking to my proven processes. And it's a nice little humbling experience and a nice reminder of the importance of sticking to my proven processes. So I don't take losses poorly, but I have a process to be able to lift myself. And I don't take wins and I don't let them get to my head, so I have a way to humble myself so that I can be in a state of equilibrium and balance. And every time I come to the market, I can just ask myself, does this trade align with my trading plan? And if it does, I can clearly make a clear judgment decision in that moment, not clouded by greed, not clouded by fear, but I can see that, yes, this trade aligns with my plan, I'm going to take it, or no, it doesn't, I'm not. Okay? So this is a very important thing to do after you take a trade. And then on top of this, a continuation of this is you then have to come to the next trading day, and before your trade, you have to remove that anchor. So this is exactly what I teach in that free Bulletproof Your Mindset course 2.0. If you don't already have that, make sure you click the link in the description or the first comment. This is a completely new and free tool that I've recreated recently. I made it even better. I've made the tool even more powerful to help with your trading. And what that tool is going to guide you through is this very powerful process that the top traders do. This tool helps you emulate the mindset of the top traders. What it's going to do is it's going to help you identify your expectations before a trade, these anchors you create in your mind. It's going to help you ground them, and then it's going to help adhere you to your trading plan. Because the only reason you get really elated after a win is because in your mind prior to that trade, you had an expectation of something. You're thinking that that trade was going to give you all these things, and it did on that individual trade. You get really elated and really happy about that. Or the only reason you were really pained by a loss is because you had an expectation the market was going to give you something, and it didn't. It's an unmet expectation. So when you go in and before you trade, you remove these anchors, you remove these expectations. Then after your trade, you dampen these oscillations of being happy when you win, sad when you lose. And remember, this is what I was trying to show you over here, the top traders are doing. They've dampened these oscillations. So they just stick to their plan and they build consistent profitability. Whereas most traders just swing wildly because they're really, really happy when they win, because it's met their expectations. They're really, really sad when they lose because it's unmet expectations. They're wasting an enormous amount of energy. The top traders, before they trade, they are aware of their expectations and anchors. They ground them. They stick to their trading plan. Then after a trade, they humble themselves if they win. They lift themselves if they lose, so they get back to their trading plan. So make sure you download that Bulletproof Your Mindset tool if you don't already have it. That's going to help you transition from an outcome-based trader who's inconsistent to a process-based trader that is consistent. Now, if you're getting value from this video, make sure you like it. It just tells YouTube that this is valuable content. So this is the one thing that the top traders that I've analyzed throughout the years have been implementing. They have a way to manage their psychology and themselves so that they're not run by the market or run by fear and greed, but rather they can stick to their trading plan, manage fear and greed, manage external factors, and build consistent profitability because they're consistently sticking to their trading plan. Now, if this was eye-opening for you, make sure you share this video with a trading friend that you know needs to hear this.